of information in the last couple months on the current real estate market. Today we want to talk about buyers and their purchasing power in this market.
Yeah, this purchasing power is a very important concept to understand because there's a lot of buyers out there that are sitting on the fence and not buying because they think the values are going to continue to decline, as we've talked about in the past. But that might not be in their best interest, and here's why. We're going to use an example of a $200,000 sales price because that's the average sales price in our area here in the Salem market. Well, at $200,000, if you were to get a 4.5% interest rate, which is really something of the past as interest rates are currently starting to go up, but at that price, you're going to be expected to pay about $1,013 per month in principal and interest alone. Well, if you want to keep that payment the same, if that's what you can afford, then as interest rates go up to say 5%, that purchasing power that you're going to be able to afford is a house worth about $189,000. And then as interest rates goes up to about 5.5%, you're going to be looking at a $178,000 a home. Well, that's a big difference, especially in a market like ours here in Salem, from a $200,000 price to a $178,000 price. It's a big difference. It's a huge difference in quality and size of the home.
So in this situation, the difference between 1 percentage point in a 5-year period of time is $4,000 more in interest. That means for a $178,000 home, you're going to be paying $4,000 more in interest than at a 5.5% interest rate than if you bought a $200,000 home at 4.5%. So that makes a difference.
Yeah, and I think it's important for everybody to understand that interest rates are going up. About 2 months ago, they were about 4.5%. Now they're just starting to get about 5%. And all the economists and all the experts are saying that our low interest rates of in the 4s are going to be something of the past. So keep this in mind. If you know anybody that's thinking about buying here in the future, really take a look at what the interest rates are, how that affects their purchasing power, and what it might be down the road, because it really can cost them a lot of money. There's a lot of information out there for a buyer to digest. The fact of the matter is, as interest rates go up, as we're seeing right now, it is going to affect the buyer's purchasing power. If somebody's sitting on the fence, I truly believe now is the time to get off that fence and purchase. It's a great time to buy. You know, home ownership has always been a great way to develop wealth, and it will continue to be. There's always going to be the ups and downs, but as we look at the next 10 to 20 years, there's going to be some great opportunities out there to create wealth.
Interest rates are difficult to understand. Everyone has an opinion, but what we do know is that rates have been the lowest since the Fed started tracking them. Experts agree that rates are going to go up soon. As the economy recovers, interest rates go up. The reason for that is that mortgage interest rates are tied to the bond market. As the economy recovers, investors move money from the bond market to the stock market. Our market is showing signs of recovery. We need it. But remember, as the stock market does well, housing rates go up. As the stock market suffers, housing rates go down.
As we talked about the purchasing power, one thing that every buyer has to determine is whether or not the timing is right for them to purchase a home or not. It doesn't matter what interest rates are. If it's not the right time for you, then you shouldn't go down that road. We hope this information is useful to you, or if anybody that you know is thinking about buying, pass this along or have them give us a call. We'd love to talk to them further. From all of us at Paramount Real Estate,
Merry Christmas! God bless everyone!
Merry Christmas!